Three, two, one, one, two, three.
Welcome back to QAV TK. We're recording this on the 4th of February 2025, the day after the US implemented tariffs and then unimplemented them immediately. What a
Did they
crazy.
really implement? Did they implement? Really?
What it's, as we were just saying off air, it's Trump whack-a-mole, and just collapsed our market by whatever it was, $100 billion
Yeah.
yesterday. And I haven't checked today. I think it was back this morning when I had a look. I haven't had a look since I went to training, but
Not completely back, but it's back a little bit.
right.
Yeah.
Yeah. Oh no, it's only not even halfway back to where it
Hmm.
was. Anyway, how are you, TK?
Very well. Enjoying watching Justin Trudeau earnestly try and talk to the American people about tariffs. The issue isn't tariffs, Justin. Laugh it off, man. Go and find out what Trump really wants.
Well, he's out of a job anyway, isn't he?
Yeah,
Trudeau.
he's already resigned. Yep.
Mm.
Yeah.
Speaking of resignations, I just saw in the news as I was setting up that the CEO of Resolute Mining has resigned.
Okay.
Okay.
Okay. Yeah. Put a tariff on it.
I don't know. He gets held in detention in Mali for a week and he resigns.
No, it's not. Was he? Was he? I thought that was West African Resources.
No, Resolute Mining.
Oh, it was
Yeah.
Resolute. Okay.
Yeah.
Ah,
Terry Holohan has resigned following his detention in Mali. So I can understand that.
is he now working for the government of Mali?
Doesn't say.
Okay.
But their share price collapsed again from 42 cents down to 37 cents. So fortunately, we were out of it already. But, go back to November, it was trading up around 76 cents. And
Yeah.
then it didn't recover from that. And now it's taken another hit. So, yeah. I hope
Good thing we
everyone's out
got
of
out.
Resolute Mining. Yeah, I
The
hope
first,
everyone got out.
as Phil Muscatello says, the first cut is the cheapest.
Oh, yeah. There you go. Good one, Phil. So, what do you want to talk about today, TK?
Well, I thought we'd turn this into the tariff show, shall we? Uh, I mean, this is the sign of a frothy market. Valuations are up, so any sort of trembles in the international market's going to take 1 or 2% off our share market for sure. So that's just take that as granted. Don't get too upset. Um, I'm not a fan of tariffs. I mean, if we talk about tariffs, forget about Trump and just talk about why tariffs are good or bad. I think they're bad in general. And one of the only things I've ever heard that made sense from an economist is is known as the Ricardo effect, which basically means that countries should stick to their
Ricky Ricardo from I Love Lucy.
No, different Ricardo. The country should concentrate on what they do best. So in Australia's case, it's mining. We should make mining a key industry and do whatever we can to sell ore overseas, because that's the best benefit for Australia in terms of its utilising its resources. Instead of saying that, we want to also be a manufacturing powerhouse, we also want to be a accounting powerhouse or an AI powerhouse or a tech powerhouse, and putting lots of effort and resources into those things when really we can't compete with the real powerhouses in different countries overseas. So the Ricardo model, or the Ricardo effect, it's sometimes called, just says stick to your knitting and then trade what you do best with somebody else for what they do best. And it actually is the most efficient way of allocating resources around the world. And I think that's pretty true. And I always come back to the simple analogy. If I was a business owner, like a coffee store owner, I'm not going to do my own books. I'm not going to, I mean, potentially I can do my own IT, put up my own web presence, et cetera, et cetera. I'm going to outsource those tasks, perhaps marketing, um, any sort of HR advice I need, legal advice that I need. I'm not going to train as a lawyer so I can run my coffee shop and handle all my own legal cases. I'm going to get advice. And that's the same sort of thing. You stick to brewing beans. That's what you do best. And you sell that in the marketplace. And then you buy the other services from the experts in those fields that concentrate on doing that. And that's a much better allocation of time and effort and resources than trying to establish non-competitive industries. And we kind of found that out in Australia anyway, through the car industries, where we had big tariffs to support local manufacturing, and eventually that becomes kind of perverse because you'd have to argue that Ford's and GM's main business competency wasn't making cars, it was seeking assistance from governments and threatening to leave the government if they didn't receive an appropriate level of government funding. And, when their bluff was called, they left. And as I was saying to you off air, I'm in the market for a small car for Jenny and to be shared by Alex when she learns to drive eventually. But
Alex doesn't drive?
Nope.
She's like 25.
Yeah. Oh, Jenny doesn't drive either. She hasn't driven in 10 years, but I'm kind of forcing her to make her own way to Melbourne. Anyway, my point is, like, I was out looking at cars yesterday or the day before, and the car you can buy now, brand new for 20, 25 grand, is better, if not the equal of a car you could buy from GM or Ford for twice that cost 10 years ago. So, I think the Ricardo effect is alive and well in the car industry now, and we're seeing the benefits of it, really. Now, look, there are some caveats to it, and I know people will say, but we can't let everything go overseas because if there's a war or there's an embargo, we won't get access to manufactured goods or particular food stuffs or oil or whatever. And you can take very surgical and specific ways to protect that, but the overall blunt instrument of using a tariff doesn't usually work. So in my heart of hearts, I think Trump knows that. He's just trying to find a way that he can gain leverage on other countries to negotiate an outcome that he wants in some other issue. So that's what I think is going on. May affect the Australian market. I could be wrong in that if there's a big tariff put on China and China stops, manufacturing as much and therefore stops using our iron ore as much, et cetera, it'll have flow-on effects to us, but we haven't seen that yet. And we didn't see it last time in the Trump presidency. And he learnt last time that when he did put tariffs on, the people started revolting. They started saying, hey, we're sick of paying more for these goods. This is not working, fella. And he quickly rescinded them after a short period of time. So this isn't about tariffs. This is about leverage and negotiations, and people need to wake up to that.
He rescinded the tariffs? I thought they were still on when Biden took over, and then Biden increased them.
No, possibly. But no, I'm sure that a lot of them that were put on were taken off soon after they were put on.
Well, it's, who knows what goes on in the mind of Trump. I don't think he thinks about it much more than what's going to grab headlines for the day and make him look tough and keeping the media distracted while he and his friends are doing something behind the scenes to make.
That's the other thing too, is that if tariffs do go on and he raises revenue, he'll drop taxes, but it won't be for the people paying for the tariffs. It'll be for him and his cronies. Yeah.
I saw an economist talking on video yesterday. I think it was a Wall Street Journal video. American economist was talking about tariffs that were put on Chinese washing machines. I think this was during the Trump's first term. And he said, people think that if you put tariffs on foreign imports like washing machines, that the domestic manufacturers will leave their prices where they are, but that doesn't work. He said, so if you're paying like $200 for washing machines, then you put 100% tariffs on the Chinese imports, so they go from 200 to 400. The domestic manufacturers don't leave their prices at 200. They go, oh, we can go up to 300, 350
Mm.
now and
Yeah.
still be the cheapest in the market. So prices go up across the board, which consumers have to pay for. He said, but then prices on clothes dryers also went up, even though they weren't part of the tariffs, because there's the expectation that they're roughly priced about the same. So the prices are up.
Yeah.
He said, so the US Treasury gained something like $85 million a year from tariffs on Chinese washing machines. But economists estimated that American consumers paid an extra $1.8 billion for washing machines and clothes dryers as a result of the tariff. So
Well, that's a
it's
good point. I
anyway.
mean, yeah. So, the tariff, if it's set like that, kills the Chinese exporter, which means no tariffs are levied.
Well, yeah, in
And
theory,
the
yeah,
American manufacturer only has to beat the price by $10 to get the business, so they put it up.
yeah.
And also, too, they probably it's very difficult for a manufacturing plant to double capacity tomorrow, like when the tariff is put on,
Mm,
especially if it's done capriciously and there's no forward planning or notice of it.
mm,
So they can't meet
mm,
demand. So the way you solve that equation is you put your price up.
mm.
Mm.
Well, anyway, from an investing perspective, it's chaos, but we
Yeah.
just stick to our knitting and do what we can do. What else have you got on your list of talking points?
I saw that there was an article, I think, in the Fin that said that the Wilson Asset Management um, stable of LICs was about to get a new one, and this new one was going to focus on owner founders, which I thought was interesting, given that's one of the things we look for in selecting our stocks. And they're talking about setting up an owner founder fund, and they claim that like this, again, it seems like it was part of their research was to look for companies with owner founders and give them priority when they invest. And they claim that um, just trying to find that over the last 7 years that their owner or founder-led companies, they call it, has outperformed the ASX Ordinaries Accumulation Index by 12.5%. So, given that the index has probably averaged 7 or 8% over that time, it's quite a good return from
Hmm.
owner founders. So it kind of validates what we look for as well and expect. And there were a few caveats in there because we've also seen founders behaving badly in the last 12 months. And, Twiggy's gone off and done some strange things with hydrogen and lethal humidity, as he calls it. He's gone through a messy divorce. Not a messy, I don't know if it's messy or not, but gone through a divorce. Um, Chris Ellison at Mineral Resources has had tax office issues. Richard White at WiseTech Global has had all kinds of personal issues. And so sometimes a founder can go off the rails a little bit, but the plan for WAM's new fund, Wilson Asset Management's new fund, is to use those as red flags and look for the founder not focusing on the business as a red flag or selling down as a red flag. So I thought that was interesting.
Should we have those in our checklist?
Yeah, it's a good question. Possibly. Uh, yeah, I haven't thought too much about it. But yeah, there's a few. Yeah, well, Twiggy, I think we red flagged anyway, didn't we?
Yeah.
When everyone
Oh,
started leaving, the top
yeah.
brass
When
started
everyone
leaving.
started. Yeah,
Yeah,
yeah. Yeah, we did say that wasn't a good sign.
yeah.
Anything else?
No, I think that's it. I've got a pulled pork to do, but I'll hand over to you first.
I thought I'd just do some quick portfolio updates.
Hmm.
The dummy portfolio for the financial year is up nearly 16% versus the STW up about 11. So it's doing quite well. My super portfolio's not doing as well. It's up about 8%. And the light group as a group is up about 7%. But the dummy portfolio continues to just chug along. I don't know the last time I actually saw something I did have to sell recently, but I trade, I very rarely trade anything in the dummy portfolio. It just seems
Same with
to,
mine.
yeah. Let's see. The last thing I sold in the dummy portfolio was FPR. I sold back in December.
Right.
23rd of December, replaced it with PPM. Before that, I sold something like in November, 18th of November. Before that, I hadn't sold anything since August. So, yeah, it just trundles along, and it's just the portfolio that it's got just is good, just chugging along. It's crazy. The US portfolio is all time. It's up. It's currently running at about 80% versus the S&P 500 at about 35%. So it's still doing better than double, but it was doing triple going back to November. It's come off a little bit since then, but still doing okay. Can't really complain about the performance of that. So that's that. What else have I got here? Let me see. There was a great post-mortem I read of Mosaic Brands in the ABC this week. I think we've sort of touched on this a bit over the last few months. You talked about, Nonny B and the different brands in the Nonny B group, Rivers, Millers, Katie's. I think they've just announced that they're shutting down the last of those. There was like a rescue attempt, but it failed. The receivers and managers of Mosaic Brands Group today announced the closure of Miller's and Nonny B, the remaining brands and stores in the Mosaic Brands portfolio, a spokesperson said. The closure means 252 stores will shutter and 933 employees will be impacted. Despite the best efforts of all parties, we have been unable to achieve a sale of any of the brands within the Mosaic portfolio, KPMG partner David Hardy said. Fashion and business expert Dr. Carol Tan said the outcome was not unexpected. Given the current retail environment and the financial struggles of Mosaic Brands, it is understandable that no buyers were found for Miller's and Nonny B, she said. The retail sector has been facing significant challenges over the past few years, including economic pressures, changing consumer behaviours, and the rise of online shopping. So they said the total number of job losses is expected to exceed 2,000. I know we've sort of had Mosaic Brands on our buy list from time to time over the years, I think. And we've talked on and off about the challenges of retail and also online retail and, how that was slowly challenging Australian retailers, your Amazons, your AliExpress, Temu, some of those sorts of businesses, and the failure of the Australian brands to be able to compete successfully with those. But it's
and also the fast fashion brands, the H&Ms and people like that, Uniqlo's, which are producing overseas very cheaply.
Yeah. So anyway, that's the end of another Australian brand that's been around in one way, shape, or form for a very long time.
It's a shame. I mean, I've invested in Nonny B and did really well out of it for a while, probably about 15 years ago or more. City Chic Collective, I think it's called, or was called, did really well out of. And again, got out at the right time thanks to our methodology. But yeah, I mean, talking about tariffs, I mean, the rag trade was supported, the textile industry in Australia was supported for a long time due to tariff barriers. When people would argue we needed to maintain employment, we needed to have our own manufacturing base, our own shoes and clothes in case we couldn't get them from overseas or whatever. But those tariffs were wound back, I guess, probably starting with the Hawke-Keating government as they tried to internationalise the economy. So this is the kind of tail end of that process, I think. And again, like,
Yeah.
you know, is the end user better off or not? Well, you can buy, as you say, cheap stuff on Temu, and have it delivered to your door for probably well, I was going to say a fraction of the price, but a lot less than going into a river store and buying it there. And now you could argue the quality is better in the river store, and you're supporting local employment, etc. But at the end of the day, when there's a lot of pressure on people's wallets, they opt for the fast fashion from Temu.
Yeah. Yes. So what else have I got in the news? WGX was a 3P TCL. 3P TL sell. It's hard to say this hour of the day. It's a 3-point trendline sell Monday after they came out with their FY25 guidance update, and the shares dropped 12% in the morning. It was, well, we still got out at a profit, but it was a big drop, very quick, big drop.
And that just reminded me too. It's that's going to happen more and more over the next month or so because it's reporting season. So we're going to see volatility in the market, and so just to highlight, people need to be close to their portfolios, close to their alerts for the next month or so, because the market will move. We often see 20% moves in stocks as they release results, and that could either be a buy or a sell for us, depending on how it goes.
It dropped from $2.58 down to $2.23 in the space of half an hour. It's recovered a little bit today.
I'm not familiar with West Gold, but it's kind of surprising given that the gold price is hitting all-time records. As one of the safe havens, given all the flexibility in markets overseas.
Well, it was one of those things too, where when I read their announcement, it didn't strike me as that bad. You know, it seemed like a bit of an overreaction. Like the guidance update, I'll just pull it up here. It said, so they've been through a merger recently, and the post-merger guidance was production of 400,000 to 420,000 ounces. They've reduced that down to 330 to 350.
Big drop.
But yeah, it's a big drop. But then they say post-merger FY25 production guidance was predicated on the simultaneous ramp-up of Beta Hunt to 2 MPTA and Bluebird South Junction to 1.2 MTPA. During H1 FY25, the ramp-ups of both assets were slower than planned, predominantly due to engineering, not mineral resource issues. At Beta Hunt, production was adversely affected by the need to undertake significant upgrades of primary ventilation, mine pumping systems, and clean water supply. Westgold's capital investment strategy is systematically removing these productivity constraints to deliver higher production in H2 FY25 and beyond. I read that and I was like, yeah, right. So, you know, they had to do some upgrades on these things so there's going to be a little bit of a delay before they hit production. I mean, it's really not that bad. It's but it was a 3PTL sell, so I sold, but I kind of feel like it's probably going to bounce back as production ramps up, assuming that they have a clear run from now on, but rules is rules. Also in the news, our old friend Fendi, the Reserve Bank of India, has approved their full acquisition of Tata Payment Solutions. Fendi's been really good for us. It's been a great little stock, but it's volatile as all buggery. You know, it goes up and down so much. Like going back to end of November, it was at $7.75. By the 9th of January, it had dropped down to $3.50. And now it's back up to $4.64 today on this news. So it's a, you know, I'm not complaining. I think we're still up, very well up on it, but for the kind of business that it is, and there doesn't seem to be any reason why it dropped by 50% at the end in December. Like there was no announcements to say they didn't lose anything. They're just in India doing what they're doing. I can't understand why it's as volatile as it is. It doesn't make any sense on the surface of things. You got any insights?
Oh, no, I think it's a small company operating overseas. So, yeah, it's going to be volatile. I haven't really followed it for a while. I'm just going to have a quick look at it. I'm guessing that even though it was a value stock, it's probably more like a growth stock now. I know there was plans to float off a large chunk of their business, so that would have been driving the news, probably pushing it up too far, and now it's come back to where it should be. But if I look at it
I added it.
now, what's the PE ratio on Findy at the moment? Yeah, so well, it's loss making. The last PE that we actually was a PE was 51 times. So it's been a value stock for us in the past when we identified it. In fact, the March PE ratio was 7 times, rising to 51 times. So it sounds like it got a bit overbought, Cam.
I added it to one of the light portfolios in May of last year at $3.22. So it's up 44% since then. I'm not complaining, but it was up, 100% at one point. Easy come, easy go, I guess. Anyway.
Oh, and possibly will come again. I mean, I remember doing a pulled pork on it, and there was some talk about, I'm not sure if it was part of this Tata financing acquisition, but they were going to hive off part of their business, perhaps the ATMs. I'm not sure, or the payment side of it, into a separate listing on the Indian stock market, and that's what was driving up the valuation. That may still happen and still prove to be a game changer for them. So we'll see.
All right. Well, that's all I've got on my talking points, Tony, for this week.
All right.
Do you want to do your
so do you want me to do a pulled pork?
Who are you doing today?
Aurelia Metals, AMI, another gold miner, predominantly. So also mines copper and silver and zinc and a bit of lead. I had a look at what company on the buy list to do a pulled pork on and couldn't find one that wasn't going backwards when I had a look last night and this morning. But Aurelia seems to have recovered back to where it was prior to the talk of tariffs in the US. And, it's a gold miner, so gold's seen as a safe haven asset. So you'd expect the gold miners not to be retreating as much as the rest of the market. I did a pulled pork on the stock, I'm going to say about 3 years ago, maybe 4 years ago. It's been on and off our buy list for a long time. And after I did the pulled pork, of course, it dropped in value. And I actually owned it and had to sell. But the interesting thing about that pulled pork, I think it was the first occurrence of our discussions on which commodity to use when using a commodity graph to track a stock, because Aurelia does mine a number of different metals. And it's not unusual to see a gold miner also mine copper, which oftentimes occurs at the same place under the ground. But I checked again with the annual report, most recent annual report, and still more than half of the revenues for Aurelia come from gold. So we'll stick with using the gold commodity chart as our underlying buy and sell trigger for the company. Who is Aurelia Metals? Well, from their own results announcement a couple of years ago, they are an Australian gold and base metals mining and exploration company. And I think base metals is how they group copper, lead, zinc, and silver. Aurelia owns and operates 3 underground mines and processing facilities in New South Wales. One's called the Peak Mine, which mines gold, lead, zinc, copper, and silver. They also have the Hera Mine, which mines gold, lead, zinc, and silver, no copper. And they acquired the Dargues Mine, Dargues mine, which predominantly has gold. Aurelia's highly prospective tenement holdings enable the company to advance targeted exploration and evaluation activities within proximity of Aurelia-owned infrastructure. Our preeminent near-term development projects include the Federation Project, now a mine, located near the Hera Mine, and Great Cobar, located in the vicinity of the Peak Mine, which is copper and gold. Aurelia's objective is to maximize returns from its producing assets while advancing its exploration and development projects to sustain and grow the business in the long term. And that last sentence is probably the key one here. So they have a history. They've been going since 2009 in the Cobar region of New South Wales, so kind of the Bathurst area and a bit further west of New South Wales. They have a history of buying mines or starting mines that have a short life left in them or a short life expectancy, but before they close them down, they drill like buggery and find another mine in the same area. So it's basically using the mine life of the mine that's operating to fund the exploration to get hopefully a bigger and better deposit underway. They started in 2009 with the Hera mine. The Hera mine was actually shut last year or in late 2023. So that kind of gives you an idea of their life cycle. And some people will find that to be risky, and I guess it is. And they look for mines with long life cycles. So if you're in that kind of camp, then Aurelia may not be for you. They found in the area the Federation deposit, and they've now developed that into a mine. And they also, in 2020, acquired the Dargues mine from a company called Diversified Minerals. Dargues gave them a bit of an indigestion problem. And if you look at the share price graph, it went from a high in about 47 cents in 2022 to a low of 9 cents in September 2023. And that crash began in 2022 with the release of their results, which showed a non-cash write-off of about 95 million after tax, resulting in a statutory loss of 81 million after tax that year. And the write-down was due to the acquisition of Dargues mine not working out as planned. I guess probably amongst a few other things, but that was mainly it. Notwithstanding that impairment charge, the underlying profit decreased, and that was largely due to lower ore grades, increasing the cost of sales. So basically, they bought a mine. They thought it was going to have a certain concentrate of gold. It didn't. It had less as it continued to be mined, and they not only made less money, but were forced to write down the cost of acquiring that mine. So that's, I guess, one of the risks of what they're doing. It's that kind of necessitated a change in management, and in 2023, new management came in. They undertook various projects to reduce costs in the business and get the finances under control. Debt was paid down to zero, and the new incoming CEO secured a $100 million funding facility, which allowed them to develop the Federation mine. And stock analysts kind of like that. And so they started increasing their consensus forecasts, and now the stock is being re-rated. I did the analysis at, I think, 19 cents a share. So it's up from 7 to 19 cents in the last 12 months or so, which is, nearly tripling, or almost a tripling in value. But all these things are largely on the strength of what's going to happen. What is going to happen with the Federation mine, what's going to happen with the drilling, the resources. So this is almost like a story stock, which we try and avoid. I guess underpinned by the fact that what they are doing throws off lots of cash, even though I think the latest results in 2024 showed they were still at a slight loss in terms of profit after cash and profit after tax, sorry. They are throwing off lots of cash, operating cash flow. So that's good. And that's funding their exploration. So they seem to have that working well for them. If I look at the numbers, the ADT for this stock is $238,000 a day. So it'll suit a lot of investors, particularly with portfolios up to about 750,000 or so. Stock price, as I said before, I'm using for analysis of 19 cents, and it did drop overnight, but it's almost back to that price today. Last time I checked before we started recording. But that 19 cents is only 76% of the consensus price target. So I think the consensus price from memory was around 26 cents. So the analysts are buying into the story. and like what they're seeing and saying the stock is underpriced. I can't calculate IV1 because we're not getting a positive earnings per share, but IV2, the forecast earnings per share is 19 cents, which is where the price trades now. So it's certainly meeting our value metric from that point of view, and it's also meeting it from a book value point of view. So net equity per share and net tangible assets for this company are both around 19 cents. So we can buy it for a reasonable price. The question is, is it without risk? And there are risks because they've got to do what they say they do, basically. The mitigation of that risk is that there's a lot of cash behind them and no debt. So that's good. Stock Doctor Financial Health is early warning, and the trend is steady. So we can't score them for financial health. Stockopedia rank it as 89 in terms of quality and given an F score of 5 out of 9. So kind of similar financial health rating in Stockopedia for that. There's no dividend being paid, so we can't score it for that. Getting back to Stockopedia, the overall ranking for this company is 99. So it's very high up on the Stockopedia rank based on a high score for momentum. So they're kind of tracking the recovery in the share price over the last 12 months and boosting its score because of that. PE ratio is NA, so we give it a score of 0. We can't score it based on that. However, the prop cap is only just over 3 times, 3.1 times. So I think what everyone's seeing is that the losses after NPAT are almost back to 0 and will probably go positive next time they report. And the forecast earnings per share is to increase by 700%. So if the forecasts come off, then that's going to be a good thing. But I can't score it based on that forecast earnings per share because we don't have a PE ratio to compare it to, and we check for growth over PE. There's no owner-founder in the company. However, there is a shareholder sitting on the board owning 19.88%, a chap by the name of Franklin or Lynn Brazil, I think he pronounces it, Queensland agriculturalist. So I'm not sure what his knowledge of mining is, but one of the things I do note is that the Cobar region is smack bang in the middle of farming districts in New South Wales, so perhaps he's come across it from that perspective. But yeah, I give it a score of 2 because there's a director with skin in the game. We score it for a recent 3-point trend line uptrend. Equity has not been consistently increasing, so no score there. So total quality score of 11 out of 15 or 73% and a QAV score of 0.23. So pretty high up on our buy list, probably the highest gold miner on our buy list. And gold is having its time in the cycle where it's hitting new records almost every day. So being a gold miner is not a bad thing. What are the risks? And I'll read again from their annual report. They call it the replacement of depleted reserves risk. And they say the company must continually replace reserves depleted by production to maintain production levels over the long term. Reserves can be replaced by expanding known ore bodies, locating new deposits, acquiring new assets, or achieving high levels of conversions from resource to reserve with improvement in production costs. Exploration is highly speculative in nature, and as such, the company's exploration projects involve many risks and can often be unsuccessful. Once a prospect with mineralisation is discovered, it may take several years from the initial discovery phase until production is possible. As a result, there is no assurance that current or future exploration programs will be successful. There is a risk that depletion of reserves will not be offset by discoveries or acquisitions, or that divestment of assets will lead to lower reserve bases. The company's mineral base may decline if reserves are mined without adequate replacement, and the company may not be able to sustain production beyond the current mine life based on current production rates. So that's a pretty good summary of what happened to them in 2022, which led to replacement of the management team, and hopefully they got the lesson, and 2023 looked better for them. But yeah, that's the case with this company. They're kind of on this treadmill of buying and developing short-term mine leases, getting them to production, bringing in cash while quickly trying to find extensions or new companies to acquire. Uh, what else can I say? One thing to call out to people is that the price is currently trading 3 cents above the current sell price. So just be aware of that. It won't take much to turn the stock into a sell. So be careful of that. On the upside, though, as I said, gold price is doing really well. One of the issues, though, with this company is its all-in sustainable costs. So the cost of producing the oil, or under accepted accounting standards, is currently sitting at $2,035 Australian, which is down from 2,300 the prior year. So that's a good thing. But $2,000 is, even though it's providing a good healthy margin now, is not the lowest of the cost curve. So if the gold, when and if the gold price does decline, companies like this will be the first ones under pressure. It'll be the ones with all-in costs more like $1,500-$1,600 an ounce that will last longer and be thought of better in the market because of their higher margins than a company like this. So the gold price being up is an upside. If it keeps going up, it's just throwing cash at a business like this because it's all margin for no extra work. But when it does turn down, it'll become a risk. So yeah, have a look at Aurelia Metals. It's been on our buy list for a while.
And in fact, I added it to one of the light portfolios in April 2024 at 16 cents, currently at 19 cents, according to my spreadsheet anyway. So it's up about 21% since then. It's been good.
Mm-hmm.
But my chart says the 3PTL is 18 cents. So it's...
Oh, does it?
Yeah, that's from when I ran it
very
on
close.
Friday, so it is very close.
Yeah. Okay.
I found an article about Lynn Brazil.
Yep.
Which is interesting. Let me see if I can. Where the hell did that go? Oh, there it is. This is from graincentral.com, June 2022. Southern Queensland mixed farmer, investor and philanthropist Franklin Lynn Brazil said he never thought of himself as the kind of bloke to become a member of the Order of Australia. That's an AM. He puts the AM in AMI. He received the title as part of the Queen's Birthday 2022 honours list. You got one of those yet, Tony?
No, I must have got lost in the mail. Takes a while for the mail to reach Cape Shank. Yeah. I am an ordinary Australian male, though, is one of my friends.
Oh, right. I don't think you're ordinary, Tony. Not at all. For his service to medical research and to agriculture. It is a great honour, but now I'm going to have to wear a tie, Mr. Brazil said. Never saw myself in the mould of whatever an AM is, and I never envisaged that I would get one. You go and do what you have to do, and this is just something that comes from it. Through hard work, good planning and decision-making, and rarely turning down an opportunity, Mr. Brazil progressed from a small poultry farm on the Queensland-New South Wales border to owning 4 cropping properties at Brookstead and 2 cattle operations at Goondiwindi. He can also boast multiple stock market investment successes and the creation of the Brazil Family Foundation, which contributes to many medical and scientific research organisations. Self-described as not the typical farmer, Mr. Brazil said he has always had a passion for agriculture and rural life. Farming is a very satisfying occupation because it is full of challenges to do it better next year, to do as well as your neighbours, and the satisfaction that you believe you can beat the challenge.
Oh, he's competitive. Yeah.
Yes.
Probably not a bad addition to the board too, given that these mines operate in farming areas, and there'll always be contention for water rights, water usage. There'll be contention for whether the agricultural use of the land is being affected by mining, all that kind of stuff. So couldn't hurt to have a pastoralist on the board.
And he has been involved in the Grains Research and Development Corporation, the Queensland Farmers Federation, Queensland Irrigators Council, and the Grains and Cropping Research Development Trust. One thing leads to another, and if you're around, people tend to ask you to become involved with things, he said. His wife, Bobby, also a recipient of the Order of Australia. She got an AO, who often took a leading role in... She was serving as the University of Southern Queensland Chancellor from
Mm.
2006 to 2014, the chair of the Australian Land Care Council, and a director of the Condamine Catchment Management Association. So they're busy, busy people.
Yeah.
Um, Quote
Hopefully
from
they
him
have
here.
time for board meetings of AMI.
The big future is in pulse foods. We'll be coming into a wider range of foods and ways to use it because everyone wants variation. No one drinks only 4X beer anymore. The meat made from pulses, plant-based meat, there will be a future in that, he said. So there you go. Looking
I'm not sure
ahead.
about that. There's a lot of
Really?
a lot of companies that were set up to make plant-based meat have all closed down again. I don't think it really took
Really?
off. Yeah.
Yeah. Well, I do think it's probably going to kick off at some point, but
Well,
I
it's
don't know.
kicked off
Whatever.
once, hasn't kicked on.
Yeah.
And under Trump's America, I can't see it kicking on over there. Would you like a plant-based burger, Mr. President?
Yeah. Anywho, thank you for that, Tony. That brings us to after hours, and
And
I
just
want to
before we
start.
do,
Oh
no
yeah,
questions this week. Come on, people.
we haven't had
Surely it's got
questions
to
for.
be.
There's no
I know.
questions.
There's
We've
a
answered all
lot
the
of
questions.
unanswered questions in the world at the moment. Surely someone can think of one to ask us.
True.
Mm.
Well, I wanted to start after hours with an RIP for Marianne Faithfull,
Mm.
who passed away this week. Are you a Marianne Faithfull fan?
Oh, look, not really. I didn't dislike her. Broken English was a great record. It's probably my
Great record.
yeah,
Yeah.
my only sort of encounter with her. Yeah.
She did a record. She's done a couple of records with Nick Cave slash PJ Harvey slash Warren Ellis. It's a good album
Okay.
she came out with about 10 years ago, I think, that was half written with PJ Harvey and half written with Nick, and they appear on the songs, which is really
Mm.
good. And I think her last album, which came out only a year or two ago, was with Warren Ellis, sort of writing and playing on it.
Okay. I wasn't aware of
So
that.
she
I'll look
was
into it.
part of that sort of,
Mm.
you know, enclave, part of the Nick Cave, PJ Harvey extended family. Um, yeah, I mean, a big fan of Broken English mainly, but I listened to a lot of her stuff over the years. And there's a couple of great live recordings of her, but as she, over the last 20, 30 years, but to hear her perform Sister Morphine
Yep.
live, for people who don't know Marianne Faithfull, she was Mick Jagger's girlfriend in the 60s. The very first song that Mick and Keith ever wrote, um, Tears Go By, they wrote for her. She recorded it first, then they did a recording of it. Sister Morphine, she wrote with Mick after she had a drug overdose. I think she OD'd on the way to Australia when he
Mm.
was
The
coming to
film Nick,
make
when Nick
Ned
was
Kelly.
filming Ned Kelly. Yeah.
Yeah, she OD'd on the plane
Mm.
and then was in a coma in an Australian hospital for like 6 weeks or something. And Sister
And
Morphine was written as a result of that. She recorded a version, and the Stones obviously did a version.
and you know her first words when she came out of the coma?
No,
Mick said something like, "Oh, I thought you were dead," and she said, "Wild horses couldn't drag me away."
that's right, and that's where Wild
Mm.
Horses came from. I had heard that
Mm.
story. Yeah, but and then as she got older, she was an actress too. Made a lot of
Mm.
movies. She was in the Dune reboot, the first
Mhm.
Dune reboot, as one of the Bene Gesserit's
Mhm.
sisters, or the Reverend Mother, I think. But her voice was great. She was a very attractive woman, like very pretty, younger, and then as she got older, very very attractive, middle aged and late aged woman with a very posh British accent. But her voice
And
was
gravelly.
like gravelly voice. And
Mm.
when she sings Sister Morphine live, it's chilling, like really, really chilling. Anyway, and then Why'd You Do It off Broken English, and Broken English, the
Mhm.
title track of that. Just, like a really great performance. Did a lot of sort of um who's the German guy that Bowie and Kurt Weill, like a lot of Kurt Weill type songs, that sort of German Berlin theatrical sort of stuff with her, you know, sort of theatrical performances of it. Yeah, anyway, really good. I've been going back and listening to a lot of her stuff over the last week. What about you?
Well, I can report is Jenny and I have loved watching the series of Rogue Heroes. Have you seen that one on SBS on demand?
No, what's that about?
It's about the history of the SAS in in
Oh,
um,
okay.
in Libya in World War II. And it's a sort of stock standard war thing, but it's got the most amazing soundtrack, and it's real rock and roll, fighting, swearing. It's a lot of fun. It's great. Any series that races jeeps through the desert to Highway to Hell by AC/DC and I Fought the Law by the Clash. It's just great.
So not period tracks.
Well, it
Just
intersperses them, so you'll have a scene in a bar in Cairo, and they'll play Noel Coward, and then they'll cut to Motorhead or
right.
or something similar. It's just fantastic. Really well
Yeah,
done.
okay.
Great
Another thing to
acting.
check out.
Yeah.
I've been watching Inland Empire again for the first
Oh,
time in 20 years. I'm
I
about
find that the
halfway
most
through it.
inaccessible of David Lynch's
I
movies.
think, yes, quite famously, the
Yeah.
most inscrutable of Lynch's
Mm.
films, and deliberately so.
Mm.
And I'm loving it. Just
Oh, okay.
oh, I'm loving it. It's like just 3 hours of a nightmare that makes no sense, but the performances in it are terrific. And the actors and actresses in it had no idea what was going on. Laura Dern, I've read an interview with Laura Dern saying that I think she was interviewed when it was premiering at the Venice Film Festival or something. And she said, I can't wait to see it to find out what it's about. She said her and Justin Theroux, the male lead in it, would sit around in between scenes trying to figure out what the hell the film was about. They had no idea when they were making it. Grace Zabriskie, Grace Zabriskie,
Yeah.
she was Laura Palmer's mother.
Uh-huh.
She only has a small role in it in one of the early scenes as some Polish woman. It sounds like she's from Transylvania, who's just telling Laura Dern these weird, chilling stories. But her performance is like, it's over the top, but it's marvelous. And it was all shot on a
Yeah.
digital handycam. It looks grainy,
Which
which makes it kind of looks like a home movie kind of thing.
I found that
But
really
it's,
hard to watch after a while.
uh, I love it. Like, it's harsh. The
Yeah.
lighting's
Yeah.
harsh. The sound is harsh. The quality, the video is harsh. It just adds a harshness to the whole thing, which is part of the effect of it, I think. But it was his last feature film that he made. It was
Mm.
like 19 years ago that he made
I
it.
know.
So,
Strange, isn't it? Really?
it's one of those things, like one of the tragedies, I think, of the American, the Hollywood regime is the great geniuses like him, like Orson, struggle to operate in it. So, your
Mhm.
Scorsese's even struggle these days.
Mm.
Tarantino gets away with it, but a lot of these auteurs have really struggled to
Coppola.
get funding. Yeah, Coppola, yeah.
Mm.
They have to raise money in Europe or raise it themselves, fund it themselves. I think he funded Inland Empire himself. Anyway, I've been enjoying that. And I've also been reading Sailor and Luna, Barry Gifford's book that Wild at Heart was based on. You ever read that?
Ah, I haven't, no.
It's great. It's just
Is it?
short, like short chapters. Each chapter's only a few pages long.
Mm-hmm.
Sorry, my wife is trying to knock my laptop off the table here. She's walking around. Yeah, really good. I mean, it just captures. Well, Wild at Heart, the film, just captured the characters in the book really well, I think. What else? Oh, PJK. We were
Yes.
talking about off air. For people who didn't see it, it's in the Financial Review and some statements from our former Prime Minister. Donald Trump believes in American nationalism, but he does not believe in American internationalism, Keating says, nor does he buy the idea of American exceptionalism. the idea that Joe Biden, Hillary Clinton, and George W. Bush were glued to, that in some way they had God's ear and that their job was the propagation of the faith, the values of their exceptional state. Trump's street smartness tells him this is nonsense. Though he lacks an analytic framework, his intuition pushes him past crude US policy dressed up as some rules-based order. He knows the key US rule is snatch and grab, a policy he understands and is okay with but will not eulogize. Trump's presidency could be central to him engineering avoidance of a third world war, which the Democrats, in their manic commitment to primacy, were otherwise sliding towards. Using Ukraine from 2014 as a US surrogate to contain Russia, and their mealy-mouthed claim that China represented a military threat to the United States when, in fact, China intends to attack no other state, certainly not the US. China's objection to foreign military assets in its near waters being no different to US intolerance of foreign military assets in the Western Hemisphere. I think Trump understands this. His Vice President, J.D. Vance, certainly does. Hard to disagree with PJK.
He speaks the truth yet again. It is. It is hard to disagree with him, isn't it?
Why isn't he still our PM? That's what I want to know.
Yeah, I agree.
Apart from, all of the nonsense and bullshit that come out of both of our major parties here about Israel or Ukraine or the US or China, it's just embarrassing on every front how pathetic our major political parties are.
Well, and also too, I think in terms of at least the modern scene, it's politicians have worked out they can wage a culture war and it doesn't cost anything. Doesn't affect the budget, doesn't affect the economy, doesn't cost them anything. So that's where they focus all their attention. Now, the culture wars on DEI, which is it's an important issue for some people, but it's very periphery to everything else that's going on. But, politicians know if we argue about DEI, they won't notice us not caring about China or the Middle East or whatever. So it's a cost-free distraction.
Distractions.
Yeah.
I also saw in the news this yesterday, I guess, that the Trump administration was sort of going after US aid, not shuttering it entirely, but throwing some spanners in the works. Musk called it a criminal organization and said it's time for it to die. And Trump said it's been run by a bunch of radical lunatics and we're getting them out. We're getting them out and then we'll make a decision. And again, I have to agree with both of them. I mean, anyone who's studied late 20th century, early 21st century history of the CIA and its involvement in the overthrow of governments around the world knows that USAID and the National Endowment for Democracy, its sister organization, the NED, is basically used to overthrow democracies in countries. That's the way that the US funnels money into countries with governments where they want to bring about regime change, and then they use it to fund rebellions, to fund media, to funnel cash that, because the CIA has a lot more eyeballs on where its cash goes since some of the reforms in the 70s. These aid organizations, and USAID was set up by Kennedy specifically to do this as a regime change operation in places like Cuba. I agree with him that it is a criminal organization. But then Musk said it was run by radical leftists. And I'm like, well, actually, no. They're usually targeting leftist governments and trying to install ultra right-wing governments in these countries. But getting rid of USAID would be a good thing.
Is that the secret part of the USAID that they wouldn't let Doge go into and investigate?
Yeah. Absolutely. There's probably not a lot of a paper trail there either, I assume. It's like when the Pentagon shuffles billions of dollars to places like Afghanistan and Iraq, and then it all just disappears and they get audited and they go, receipts? What receipts? We didn't have time for receipts. We're too busy. Too busy to get receipts. I'm sure USAID has a similar model. I told you about this video, which I'll recommend to everyone. Richard Wolff, the economist, Wolff. Was watching this on YouTube last night while I was practicing my side kicks in the kitchen and stretching. It's really good. His takedown of tariffs and just America in general. He's talking to an American audience and he says, look, this is what an empire looks like when it's in decline. But you don't know that the US is in decline because none of our politicians can say that out loud. They all keep pretending that everything's going great, but really this is an empire in decline. If you study history, you know what it looks like. You can see the signs, but no one's prepared to admit that yet. We're all still clinging to the hope.
He wants to make America great again.
I guess. Yeah, there is that. What else have I got? That's it. Oh, A Dog's Heart. You ever read any Mikhail Bulgakov, Master and Margarita?
No.
One of the greatest Soviet authors, Russian authors from the early 20th century. His classic is Master and Margarita, which I've read several times, but over the last 30 years. It's basically about the devil turning up in Moscow in the early part of the Soviet era and just causing havoc against all of the Soviet bureaucrats that are annoying, the devil getting in there and messing up their lives. It was banned banned in the Soviet Union, and I don't think it got published in Russia until like the 90s, but it was available in the West from the 60s onwards. Really funny, dark, funny book. But there's a Russian guy at Kung Fu. We got talking about 20th century Russian music and literature and Bulgakov, and he said, have you read A Dog's Heart? I was like, no. He goes, you got to read A Dog's Heart. So I just read that. It was written in about 26 by Bulgakov. Again, not published in the Soviet Union, but it's a novella about a brilliant Moscow surgeon who, as an experiment, gets a stray dog off a street and takes out its glands and its heart and its testicles and replaces them with human testicles and glands and a heart from a recently deceased corpse just to see what would happen. And the dog starts turning into a human and causing problems. It's this surrealist, twisted, darkly funny story. But it's all set inside of a critique of the Bolsheviks.
Right.
And this dog starts to become a Bolshevik. It's a fierce criticism of Bolshevism by Bulgakov. Anyway, I can highly recommend that. Very, very fun read. That and Master and Margarita, two great books if people haven't read them. And then I'm also reading... Yeah, sorry.
No, I was going to say I started reading Al Pacino's biography last night.
I started that. I kind of got bored with it after a while, Yeah. Some of his childhood stories were interesting, particularly about the boys that he ran with and how they sort of got themselves into trouble, and acting and his mother is what sort of saved him.
Yeah, sharing a flat with Martin Sheen in the early days.
I don't think I got up to that bit. I sort of got distracted. Yeah, I want to read it. The other book that I'm reading at the moment is The War That Hitler Won by Robert Hirschstein. It's basically about Goebbels and the invention of propaganda, really, I guess. One of the founding fathers of modern propaganda, and how Goebbels was a master of that, really, from the late 20s onwards, how he used propaganda and, developed a very, very effective system of,
Yeah. Still studied in marketing classes today.
yeah.
Mm.
Goebbels, fascinating character. Like he was, as this guy says, he was everything the Nazis hated. He was an intellectual. He was weak. He had a disability. He, was not by any means like some sort of Aryan
Yeah.
Superman, but he understood mythology and how to sell the Germans on this vision of German supremacy, Aryan supremacy, and how to target the Jews and the Gypsies and the communists and et cetera, et cetera. So it's interesting, doing a deep dive on Nazi propaganda in the 20s and 30s and drawing parallels between that and what's happening in the US and increasingly here as well.
Mm.
And across Europe, obviously, with the AfD in Germany and Le Pen in France and the
Yeah,
same.
and I mean, it's not going to be, it's not hard. It's not going to be a stretch to see Peter Dutton adopt, you know, all of the cultural war tactics that were successful for Trump.
Yeah.
Mm.
Yeah. So anyway,
What was the joke I heard, or I read recently about Musk and Trump talking about putting tariffs on Europe? And Trump says, yeah, we should bring in lesser of those things from Europe. And Musk goes, fewer? No, fewer. And Trump goes, shh, don't call me that yet.
oh, that's good. That's better than the joke a guy told me at Kung Fu today. Do you know why a meat pie in Cuba costs $9.20, but the same pie in the Caribbean costs $10.50?
No.
It's due to the pie rates of the Caribbean.
Oh dear.
And with that,
Yeah. Yeah, people better think up some questions for next week. Otherwise we'll start walking out all our dad jokes.
doing stand-up routines.
Yeah.
Quite have a good week, Tony.
Yep. Thank you, Care. You too.